Well, hello and welcome to the midweek trade right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Egypt's inflation surges at the fastest pace this year, and that's for May. And the world's best currency status, that slows Ghana's inflation to the lowest since 2022. Plus, Zimbabwe's industrial reconstruction and growth plan focuses on pharmaceutical local production. And it's great to have you join us. I'm Ladi Williams right here with the midweek trade, and we're going to be checking all the markets, starting with commodities. At this point, we're seeing oil prices, they've edged lower in early Asian trade. That was earlier, but we're still seeing that drop there, 0.1%, $65.62 a barrel. That's for Brent crude. But back to that, $65 level. WTI crude, $63.32 a barrel, 0.1% down. We know both benchmarks were up yesterday about 2% to a two-week high, supported by worries over supply disruptions from Canadian wildfires and expectations that Iran will reject a U.S. nuclear deal proposal that is key to easing sanctions on a major oil producer. U.S. President Donald Trump and Chinese leader Xi Jinping they spoke earlier today, and we did see the reports there, Trump saying that Xi is a very hard person to actually do a deal with at this point. We'll get more updates on the talks there between both presidents. So the metals market now, we're seeing gold prices up $3,370, 0.6%. That's for spot gold. U.S. gold futures, that's up 0.5%. That's 0.5%. Spot silver holding up there, $34.59 per ounce, 0.3%. Our platinum is also shining there, 0.5%. And just palladium unchanged at $1,009, still maintaining that $1,000 psychological level. And we know the metals market, it loves uncertainty. That's what drives it. And we're seeing the central bankers there accumulating gold so far. When will they stop accumulating gold? We'll definitely find out at some point. All right, to other stories now. We see the International Air Transport Association, as IATA, have projected that global airlines will post a net profit of $36 billion in 2025, an increase from $32.4 billion in 2024, though slightly below the $36.6 billion forecast made in December. Africa's carriers are expected to contribute the smallest share with just $200 million in profits and a net margin of 1.1%. The projection contained in the IATA 2025 Airline Industry Financial Outlook highlights the continued struggle of African airlines despite marginal gains. And federal government has partnered with the Food and Agriculture Organization, FAO, to unveil a 200 million naira support initiative to boost the country's agriculture industry. The Director of Fisheries and Aquaculture at the Federal Ministry of Marine and Blue Economy, Mr. Wellington Morgan, made this known at an event in Ogun State. Says the initiative is also expected to help meet the country's annual fish demand, while commending the FAO and other development partners for their support in helping Nigeria improve its fish production capacity. He pointed out that access to finance, particularly the rising cost of feeds, is a major challenge fish farmers face in the country. As a deadline for recapitalization given by the Central Bank of Nigeria to BDC operators expires, there are concerns that about 3,600 BDCs might lose their registration. This comes as the Association of BDC Operators of Nigeria, APCOM, confirmed that the CBN's June 3rd recapitalization deadline for industry remains sacrosanct. However, the president of APCOM, Mr. Aminu Gwadabe, was a guest on Business Morning earlier, says he has appealed to the CBN to extend the recapitalization deadline and review license requirements, as less than 10% of members have met the threshold, putting over 3 million jobs and livelihoods at risk. Take a listen.
I appreciate the governor's passion, especially in collaboration and diversity. They have continued to engage to see where are the challenges. As yesterday, till about 11, 12 a.m., we are still discussing what is the best way forward. So we are not totally losing hope. We believe maybe before the end of today, the CBN may make an official pronouncement, so that, you see, there is no reason to create tension, because this is what will have happened, the unintended consequences. You know, you create tension, you create disruptions in the market. Yesterday, we've seen some positive development in the parallel market, the dollar even getting lower than about 1.6 to Naira. However, this morning, we're hearing the whole story have changed. The rates, the Naira is depreciating. So these are some of the unfortunate likely tendencies that will impact the market negatively. So I think it's good for all of us as stakeholders, as partners in progress, to look at what is best for our system and what is best for the sector.
Yeah, that was Mr. Guadabe earlier today. Definitely all eyes on the central bank now to see if what the next move will be. Will it hold at this point? That's the recapitalization for the BDCs. To our first conversation now, in a significant stride towards modernizing its financial infrastructure, the Securities and Exchange Commission of Nigeria has announced the transition of the equities market settlement cycle from T+3 to T+2, effective November 28, 2025. This change implies that transactions executed on the stock exchange will now be settled 2 business days after the trade date. Joining us to analyze now, we have Mr. Tajuddin Ibrahim, as a Director of Research and Strategy at Chapel Hill Denham. Great to have you on the show, sir.
Thank you for having me on the show today.
Right. So I guess, you know, I guess some investors will be looking for maybe T or maybe T+1 at this point, but I guess it's T+2 now. That's an improvement, you know, at this point. You know, talk to me about how this shifts, you know, in settlement cycle will impact trading and investment strategies.
So the shift is going to positively impact investment strategy and also trading when we look at, you know, the development from those two perspectives. The one thing to bear in mind is that the decision is going to make the market a lot more efficient, and it is also going to result in an increase in trading activity and investment activity by investors across you know, the world. Because, and I say across the world because we are not only looking at, you know, how it will impact Nigerian investors, it will also going to positively impact you know, foreign investors that trade in the Nigerian market. Because effectively, what it implies is that we are moving to where the UK market is currently in terms of settlement. We settle T+2 from November onward. That is where the UK market is also. So T+2, that makes us relatively more competitive from the previous settlement cycle of T+3. So in summary, it is a positive development.
All right, so do you think investors need to make, you know, any kind of change at this point to their, you know, current portfolio or trading practices, you know, to adapt, you know, to this new cycle?
So what I think is going to happen is that, you know, investors would have to be ready, you know, to ensure that their cash is really made available for investment. Because when you want to buy stocks, it means that you have to make cash available for settlement a day earlier than, you know, previously. Previously, you know, it would be like T+3, but now going into T+2, it means that if you want to buy stocks, you have to make your cash available, you know, a day earlier, and it implies that you really have to plan your liquidity in that regard. You know, and I think, you know, that is one thing that has to, you know, materialize. A lot of education has to also, you know, happen with the regulator and also the capital market operators educating retail investors in this regard, because that one day difference is material in my view. So it is one major thing that, you know, investors, you know, should expect to do. The second thing that I think, you know, is going to happen is, if we are talking about the sell leg of the transaction, you will get your cash faster. It means the cash conversion cycle is now shorter for investors, which is a major, positive development.
So what would you say are the major, potential benefits or risks, associated with this transition, for individual investors?
Well, I'm not sure there's any major risk, in this context, but what I believe has to happen is everyone is updated in line with the expectations, and everyone is better prepared, to make cash available one day earlier in terms of settling their trade. Number two is that everyone also has to ensure the availability of securities in their CSCS account a day earlier, than we had it, previously. So the risk, in this regard possibly is around, making cash available one day before versus the previous setting. The second is ensuring that securities are available a day earlier versus the previous arrangement. I think those are the two key areas for consideration.
All right, let's look at it from the brokers and dealers' perspective now. What specific system or process upgrades are required to comply with this T+2 settlement cycle?
So not so much of system upgrade possibly is required, but what is required is sensitization around this development, and what is also required is the fact that the settling banks for the traders and the dealers have to also be aware that the settlement cycle has been shortened, by 1 day, and that implies that transactions should go, one day earlier compared to the previous, cycle. And I think also dealers and traders, are now able to, watch their liquidity management more efficiently because, it is now down by 1 day. Previously, they had up to like 3 days to manage any form of liquidity that arises from investors taking position in the market. But now that has reduced to 2 days, and it implies that they really have to work around being more efficient around managing liquidity for just 2 days instead of 3 days previously.
And how do you think this will drive investor sentiment, really? Do you think it'll be more on the sell side or buy side?
So let me put it in this perspective, right? If I buy a stock on Monday, it will settle for me to get value on Thursday under the current arrangement of T+3. But for a T+2 arrangement, it means if I buy on Monday, I can get value, for what I buy on Wednesday. So what that implies is that I'm able to plan to see what else do I want to buy on Thursday. That is number one. Number two is that if I were to sell any instrument in the market right now on Monday, I will be getting my money into my account on Thursday, which is fine. But under a T+2 arrangement, I will sell on Monday and get value, get my money into my account on Wednesday, which means I am a lot more encouraged to buy additional stocks in the market. It should encourage more trades. It should encourage more investment in the market. It should encourage more participation in the capital markets because the cash conversion cycle is now a lot shorter compared to what it used to be previously.
Do you think it will encourage the youth to participate more in the market?
I think yes, because the youth, as we all know, are always in a hurry to get their cash. They are always in a hurry to get things done. They really want things to happen very quickly. And if the capital market is adopting a strategy that will make things happen more rapidly versus previously, I think it is something that the youth would like. And I think over time, the youth possibly will also be looking for a T+1 settlement. That is where the UK market is migrating to in October 2027. So we are matching the UK market as we speak, going to T+2 settlement, but they will leave us in 2 years' time to go to a T+1. And I think it is something that we should also be looking for to ensure that more youths are encouraged to invest in the capital market. The faster we are able to get our cash, the more we are interested in the capital market investment opportunities, in my view.
Right. I guess we'll see who makes it there first. If Nigeria can make it to T+1 before the UK, but definitely we're following their lead, from what I'm seeing so far. Thank you so much, Mr. Tajuddin Ibrahim, is the Director of Research and Strategy at Chapel Hill Denham. Thank you for coming on today.
Thank you for having me on the show.
All right, to other stories now. See, deposit money banks in Nigeria will now have to deduct charges for unstructured supplementary service data, that's USSD transactions, directly from customers' airtime as opposed to their bank accounts. This development, according to banks, follows a directive of the Nigerian Communications Commission on the implementation of end-user billing proposed years ago. UBA clarified that under this new billing structure, each USSD session will attract a charge of 6 naira 98 kobo per 120 seconds, which will be billed by the customer's mobile network operator. All right, this next conversation also has to do with the telecoms industry. It's time to dig into Nigeria's telecommunications sector. See, the 2025 industry report by AfriInvest provides a comprehensive overview of how operators like MTN Nigeria and Airtel Africa have navigated a stormy macroeconomic environment while sustaining digital transformation and economic inclusion. We'll explore the strategic responses, regulatory shifts, and market dynamics shaping the road ahead. Joining us for this conversation, we have Benedict Egochukwu, who is an investment research associate at AfriInvest. Great to have you on the show.
Thank you for having me.
So, looking at your reports there, despite macroeconomic turbulence, the telecom sector, that grew by 6.2% in 2024. What key factors do you think enabled this resilience? And do you think this growth can be sustained, throughout 2025? I know that telecom sector is like a defensive, sector when it comes to trade.
Okay, so just to provide a little bit of backdrop to that figure, which is around 6.2%, if you consider the previous years, that is in 2022 and around 2023, you see that the telecommunications sector actually grew by around 10.7% and 8.9% respectively across those 2 years. So the growth we actually see in 2024 of around 6.2%, while though it did grow, it was actually lower, or shall I say moderated compared to what we saw in the previous 2 years, 2022 and 2023. And one of the major the strong push or the supporters of this growth was basically some strong demand in data growth because people kept relying on data connectivity across the country, as well as also return, should I say, because last year, sometime around October 2024, the whole NIM SIM policy came to an end. And because of that, we're able to finally see the number of subscribers available in the country to know where the country actually stands. And we found out that as at October, the number had been dropping. But since October, we saw a pickup in that number from October up until December number. So we also believe that coupled with strong demand for data services, growing numbers in number of subscribers across the country, as well as improvement in the average revenue per user towards the fourth quarter of the year 2024 actually aided in the growth we saw in the telecommunications sector.
All right, so I'm going to take you back now to this latest announcement, by the NCC. It's saying that banks will have to charge the USSD directly from airtime instead of the previous, bank account charges. Do you think this is positive for customers or no change at all?
So, pardon me, can you come again with the question?
Yeah, I'm talking about the USSD directive there from the NCC, stating that banks will have to charge that USSD charge from airtime and not the bank account as they usually do. Is this a positive for customers or it doesn't really matter?
Well, if you take a look at why that policy was implemented, previously the telecommunications have really struggled to get their money from the banks because since I believe 2 or 3 years ago, the telecommunication industry have tried to see how they will get back those charges that normally comes from the bank. But unfortunately, they've been unable to do that. And I think to an extent, they were able to recover some, but not all of it. So one way of bypassing that frustration to just be to charge the account directly. So while yes, on the consumer side, it may look as though it is, should I say, more of an overburden, it's pretty much the same thing that was happening before, only that this time it's going straight to the source rather to the bank.
I guess at this point you have to make sure you have airtime to be able to make those transactions on USSD. Okay, let's look at the tariff adjustments and the impact of that. With the NCC approving the first major tariff hike since 2013, how significant has this been for revenue stabilization and investment planning across the sector? Is this just a blip or was it enough?
So just a quick recap. The NCC tariff adjustments gave room for around 50% adjustment across board, both data services as well as voice services, as well as also the charges that come with mobile services. Now, if you take a look at that 50% increment, you will find out that within the telecommunication industry, at least among operators, there seems to be this cry out that it's not enough to actually cover the adjusting costs that comes with inflation and FX challenges. However, if you take a look at the Q1 numbers from MTN, that is Q1 2025, and then the Q4 2025 for Airtel because of their financial year period, you find out that we could see a little bit of, shall I say, an improvement in the top line revenue. However, the numbers we see in Q1 2025 for MTN as well as Q4 2024 for Airtel does not fully capture the impact of this tariff adjustment. So we'll have to wait until the second quarter of the year to see the full-blown impact of this. But based on just a little adjustment they were able to trickle into the top line, we could see how much of an improvement that gave the telecom operators, and to a great magnitude, it provided them with a lot of leverage, a lot of cash to deploy more network facility, network infrastructure across the country to increase their quality of service as well as capacity. So moving forward, what we actually believe seeing is we will wait until the second quarter of the year to see how this tariff actually will impact their top line as well as their bottom line in order to cover up those costs that comes with inflation and FX. And until then, we cannot fully, should I say, identify how big this impact is going to be, because there could be a potential need for the telecom operators to actually request for more tariff if the need may arise.
All right, let's look at the market structure now. Given that according to the data there, MTN and Airtel control nearly 86% of the market. Do you believe the introduction of MVNOs can meaningfully improve competition and service innovation? Even though I heard from some of the MVNOs there that most of the MNOs are not really giving them room to play.
Okay, so we've known that the Nigeria telecommunication sector has always been an oligopolistic structure in nature. But what we've seen over the years is MTN and Airtel rising to the occasion and claiming most of the market share. As of today, combined, they account for over 85% of the market share. And while, yes, this may sound good, it actually presents an upside as well as a downside. Upside will be for the two major players. On this side, what we expect to see is that operators can actually benefit from economies of scale, which supports their large-scale investment in network infrastructure, their technology upgrade when it comes to 4G deployment and 5G deployment, as well as service innovation. And then this will also, lead to improved connectivity across the country. However, when you take a look at the downside of this system, you find out that there's a limited number of individuals playing within the market. And what this means for the customers, because it's going to be on the negative side for the customers, is that these players have the power to tweak prices the way they see fit, because no other player within the market can actually compete against them. So which means in terms of pricing, these two telco giants continue to control the market, because Globalcom and Nine Mobile, they still struggle to keep up with scale and investment capacity within the market. And then just to couple up with that, because of how highly capital intensive the industry is, it prevents other players from actually coming into to play. However, if you take a look at what has been coming up in recent years, we have something known as the mobile virtual network operators. Basically, what these people do is they don't build their own infrastructure. Rather, what they do is they leverage on existing telecommunication operators and deploy their own services to the consumer base. However, at this particular point in time, the mobile virtual network operators, they are still in the early stage of the market, and we can only see the success of this group if and only if the regulatory authorities actually provide a playing level field for these individuals by providing, robust consumer protection policies against the major big players, as well as also, make sure that the what they call it now, the pricing system also favors them as well, and not just the telco giants.
All right, definitely. We'll keep watching that segment, to see how the MVNOs are able to enter this market and, put out their services there. But thank you. It was great having your perspective. Thanks for this report. Benedict Eguchukwu's Investment Research Associate with AfriInvest. Thanks for coming on today.
Thank you for having me.
All right, after this now, we head straight to the markets. Anita will bring all of those details after this break. Just stay with us. All right, let's head straight to the markets now. We have Anita Edet with the details. He's going to tell us who's making money and who's not. How's it looking, Anita?
Well, Lado, the markets, investors are making money.
Right.
Because second day of trading within the month of June, which has just started just about 2 days ago.
Right.
So far, the market has made over 300 billion in just 2 days. And then at the same time, we have about a month to date, which is between Monday and Tuesday, 0.62%. So can you beat that?
Right. I guess I can't, beat that. And
exactly.
We're riding on that bullish sentiment coming from May. But who knows?
5.62%.
Are you going to have to prune in June? That's prune those profits.
Exactly.
Maybe that's a new one.
Say May, sell in May, go away.
Right.
Prune in
Prune
June.
in
No,
June.
I don't think you're gonna have to make it. Maybe I'll try to coin a word.
We'll find something. Definitely.
Exactly. So to make it a market rhyme,
right.
And then also rhyme that with your pocket, because it's all about making money, putting your money where your mouth is. Of course, we have a potpourri of investment decisions and investment choices for everyone. When you put your money into stocks, the crypto, the forex market, the fixed income market,
or you just want to buy gold. There's so much.
Okay, but I'll tell you that the stock market is one of the easiest to make money. Just put your money and then just watch, and then not much of a risk.
Right.
Especially when you're keeping your eyes on the market.
On the market.
Okay. So now, with that being said, let's take a look at how the intraday market numbers is performing at the moment. Starting first from the home front, the NGX ASI 0.16% and still climbing on the back of that previous gains that we saw, 112,000 points and climbing higher. Yesterday, we saw that the market was up by about 0.37%. In value terms, in Nigerian local currency term, that's about nearly 260 billion coming on the back of 34 gainers against 31 losers. Of course, let's just mention that MTN was among them, Guinness was there, Transco was there, Dangote Cement, GTCO. So quite a number of those top equities there lifted the market for the close of Tuesday's trading session. And as we speak, this is still continuing, so we're going to have more details about the intraday market numbers before about an hour before the market closes for the day, and then tomorrow will be the final trading day for the week, because the markets will be observing a Muslim holiday for the next between Friday and Monday. So, but that's for Nigeria's stock market. But for the Johannesburg Stock Exchange, yesterday and previous day, we saw that the market at intraday was in the red, but this time 0.75%. That's the last track that we saw the market printing at intraday and still climbing almost close to the 96,000 points, 95,589.88 there, as you can see on the screen. But look at the other markets that we see. I think the greens have it, except for the Tuesday's close that we had for Kenya Stock Exchange, which was down by 0.37%. But take a look at Egypt. We see that the market intraday, it was up by 0.44%. And this is coming amidst the report that the country's inflation, it jumped to about 16.8%, which we had that as our top story there. 16.8% in May. That's according to the country's statistics office. And at the same time, we also have it that the country's net foreign reserves has risen to about $48.526 billion in the month of May. That's according to the central bank. That's quite higher than Nigeria's foreign exchange reserves. We'll take a look at how Nigeria's foreign exchange reserve will be ending this week, a couple of just about a day from today. So that's a snap for the markets that we track. Okay, so now let's talk about the market analysis. The domestic stock market. We're talking about the latest developments in the first week of June, and just about 2 days remaining for the market to close before the holidays and then resume by next week, Tuesday. But let's talk about the latest developments, and we have Omotola Imafidon, equities trader with First Securities Brokers Limited. Thank you for joining us, Omotola.
Thank you so much for having me. Good afternoon, everyone.
Okay, so now we're all happy that just last week we ended the final week of we ended the month of May in the green, and then we're still continuing that green in the market in the midst of macroeconomic challenges and so many others. But can you tell us what's actually driving the market's positive turn? Because I know that some Q1 earnings results have come in, but that's not really the focus. What's actually the focus for this market's positive move?
All right. Thank you so much, everyone, for having me once again. So like you already mentioned, the equities market so far this year has been positive. And for the month of May was actually the most positive month we've seen in the year. 5.62% was the return. And really, despite the fact that there are a lot of macro challenges here and there, we saw that oil prices are still coming down and all the rest. But it just shows generally that investors are really, really positive and bullish about the market, about the recovery. I mean, they're positive about the recoveries that we are seeing being posted by a number of the non-banking financial counters, because they've been the ones that are non-banking counters, basically, because they've been the ones that have been at the forefront of the rally that we saw in the month of May, and so far in the month of June. The likes of, we'll say the likes of Nigerian breweries and Guinness, which, because of the FX losses, most of them booked previously, but they've gone ahead, done a lot of restructuring, and the impact is beginning to show in their numbers. So investors are rewarding that. And at the same time, for the telecom giant as well, MTN as well, who also suffered some bit of FX losses, they were also one of the top gainers that we've seen in the market. Shows that the tariff hike and also the lot of internal restructurings that they've done as well is paying off. So these are things that we've seen. And then for the banks, market investors are also still positive about the banks. So we've seen the likes of Stanbic, we've seen ETI, we've seen Zenith, we've seen GTCO, Access Corp as one of the top gainers as well in the month of May, and also so far this month, a number of them have been positive. And then, of course, cement counters as well. Some of the big caps, all this while have been sort of flattish, but we've also seen movement there. Although it was not all positive, we saw weakness in some of the energy stocks, the likes of Seplat, but they were not enough to depress the positive run that the other heavier stocks in the market have posted.
Okay, so now I know that it's about time that some companies are actually marking down for dividend payments, and this has a way of affecting the markets. Can you tell us some of these companies on the NGX which will be paying their dividend, and what effect would that be having on the market in the short term?
Okay, so thanks so much. A number of the companies have already been marked for dividend, except for a few. The likes of Seplat was already adjusted previous week. I think UACN's AGM is coming up today. So but already the market has been adjusted for that. But a number of companies have paid their dividends already. Going forward now, it's the fact that a number of the banks will be paying their interim dividends come Q2 2020. Come the end of Q2, they'll be doing the half-year interim dividends. So we expect that there will be those ones by, this is June, by July, August, we'll be able to, those announcements will come to the market, and at that point is when we'll see a number of the more dividend adjustments coming. But for now, most stocks are trading normally. There's really no news yet to drive any dividend adjustment for now in the market.
Okay, finally, just about 30 seconds. Myself and my anchor there, Laddie Williams, we were just talking about, selling May and go away, which we didn't see that. So what are we to expect in June so that we can give a coinage to, what the month of June should be? What do you expect for the month of June for the markets?
Okay, we expect the month of June to still be positive because, like I initially mentioned, the earnings season is, around the corner, basically, and the fact that investors will definitely want to start positioning again to see where opportunities still lie. A number of us, or a number of the listed stocks have headroom for growth across different sectors, basically, especially the consumer names, which had been badly battered, and some of the banks as well, which have been recapitalized and may have capacity to do more. So we anticipate that the market will still remain positive for the month of June. We may not rule out profit taking, intermittent profit taking, but we think the markets will close positively.
I can't wait to, have that outlook coming into fruition, Motola. But I think we'll just leave it there and await the markets close for midweek trading session. So thank you so much for your time on the show.
Thanks so much for having me. Bye.
Okay, let's see how the Middle East markets are moving. Yeah, for both markets on the United Arab Emirates are in the green. And speaking of the United Arab Emirates, we hear it there that the non-op business growth has slowed in the month of May, but that didn't reflect on the Dubai and the Abu Dhabi index, both in the green, 0.35% for the Abu Dhabi and tad 0.04% for the Dubai index. So, but let's take a look at the other markets within the Middle Eastern region. We see the Tadawul there. The news there for the Saudi Arabia is that the National Bank of Saudi Arabia has finalized a 1.7 billion, that's the Saudi Arabia's currency there, $1 billion additional tier 1 sukuk issue. Just last week, we talked about this sukuk for Nigeria. But sukuk is actually making an imprint there. Qatari Stock Exchange also, well, it's in the red, 0.56%. So let's talk about the markets in the United States. We see that the markets are actually slightly rising higher, and this is on the back of the tech giants there, Nvidia and so many others. Let's not forget that the U.S. President Donald Trump has announced a higher tariff, but that's for the Asian steel exporters. But this is how the markets. The stock futures are for the market ahead of the opening bell, and overnight they close in the positive terrain. But our Washington correspondent, Mara Bird, will give us details about the close of Tuesday's trading session for Wall Street.
The U.S. stock market climbed on Tuesday as economic data showed signs that the U.S. economy is much stronger and counter what many had concerns around the tariffs' impact on the U.S. stock market. As the Dow Jones was up at 0.5%, the S&P 500 also up at 0.6%, and the heavy-tech Nasdaq had highs for the day but was able to close up at 0.8%. As many investors are watching to see how this will have an impact on the U.S. economy moving forward, and very hopeful that this is a positive sign that the U.S. stock market will be on an upward swing for the next few days and weeks ahead.
That was our Washington correspondent, Mara Bird, giving us details about the U.S. stock market's close for Tuesday's trading session. And still talking about the U.S. stock market, we have it that analysts say that the risk of a recession in the U.S. has now lowered closer to about 25% rather than the 35 to 40%, which was actually assessed in the month of April. So we're trying to just dispel that fear that the world's biggest economy is running into a recession, because if that were to happen, or if that were to happen, would generally affect all the economies, including countries within the African region. But so far, let's just hope that the U.S. economy does not go into recession in the midst of the trade tariff being announced by U.S. President Donald Trump. And finally, let's make our crossover into the Asian markets. We see that the Asian markets have defied the tariff increase by Donald Trump, which was announced just earlier today, that the steel tariff for the steel exporters across the Asian region will be going higher from 25% to 50%. But guess what? This is how the market turned out. So, and ironically, it's actually the steel companies that made their share prices were climbing higher in spite of this news. And at the same time, the tech rally we have across the South Korea, we have the SK Hynix. For Taiwan, the TSMC. For Samsung, which is also in South Korea, it was in the green. I can see that's also reflecting on the South Korea's Kospi, which was up by 2.66%. And talking about South Korea there, they have a new president there. This is coming months after that martial law in Broglio, which dented the market's performance. So far, the market, the South Korea's market is very well in the green. That has also reflected on the country's currency. That's the one has climbed. But on the other hand, the country's consumer price index, well, actually, that's actually in the positive. The CPI, it fell from 1.9% to about 0.1%. So that's for the month of April, or for the month of May. And then for the Hang Seng, we see in the green. For the other two markets across the Asian region, it's all in the green except for the Nifty 50, which has made a pullback for the close of midweek trading session. So, Ladi, that's it for the market.
Very interesting June, kicking off right now. Could this be the month where the Trump headlines don't really take the markets down? We'll definitely find out. Maybe what we see with those steel companies there in Asia rising.
Let me shock you. I was thinking that when Donald Trump announces, or when he announced that the increase of the steel tariff, that it was going to make the markets to boil, but instead those tech shares are rallying. So it's like everybody.
Let's see if that continues in June. Thank you so much.
I just hope that continues.
Thank you so much, Anita. We're getting all the details of what's playing out with those markets. But now let's look at European markets. Turn to our correspondent, Chiponda Chimbelu. Great to have you, Chip.
Yeah, great to be here, Ladi.
So how are the European stocks trading today? I know Lars is always saying not much to see here, but how's it looking today?
Well, not much to see also here in Europe in terms of how they're trading. European stocks are actually trading slightly higher today. The Euro Stoxx 600 is actually up 0.3%. And Germany's blue chip index, the DAX, traded close to its record high of 23,325 points earlier today. Now, that is because the German cabinet approved a 46 billion euro corporate tax relief package to support companies until 2029. Now, that is an aim, of course, to kickstart Germany's stagnating economy. The German services sector actually has recorded its biggest contraction in activity in more than 2 years, after being weighed down by falling demand in the Eurozone, of course, which is something that has been an issue for the last 12 months. So despite that, of course, there is still some caution among investors. Today is the deadline for U.S. trading partners to submit their proposals for deals that may help them avoid hefty tariffs from the U.S. from taking effect. So it's not just the EU and the U.S. that we have to be thinking about, or that investors are thinking about, but also the U.S. and China, Ladi. So there's, of course, a lot going on. But so far, investors are sort of shirking off those concerns about the tariffs for now.
Yeah, quite interesting. But let's take a deeper look at the latest tariff hikes there. What is the response from the EU?
Well, the EU said that higher tariffs on steel and aluminum undermine the ongoing efforts to reach a trade agreement, and that the bloc is prepared to impose its own counter tariffs. And of course, that response was actually on Saturday, which was a day after President Trump announced that he would be doubling U.S. tariffs on steel and aluminum. So his follow through with that threat this week does, of course, raise the prospect of an escalating trade dispute between the world's two biggest trading partners. And of course, as a reminder, less than 2 weeks ago, Trump threatened to increase tariffs on EU imports to the United States to 50% in June before he backed down following a call with EU Commission President Ursula von der Leyen. Now, he agreed to extend the deadline for the 50% tariffs to July 9th. So we, of course, have to wait and see whether the EU will respond to the latest tariff hike. And of course, that is also something that we might hear more about during the visit of German Chancellor Friedrich Merz to Washington, and he is set to meet with Trump tomorrow. So we might hear more about the German response to those tariffs, and also the ongoing negotiations between the EU and the United States. So we should be watching out for that tomorrow.
All eyes on the Chancellor's visit to the White House there. But how much will the tariff hike affect the EU economy?
Well, it will probably have a major, some sort of a major impact on some companies here in Germany, because Germany is actually Europe's biggest steel producer. And that is, of course, there's been concerns about potential dumping, which could lead to some market turmoil. Now, ThyssenKrupp, which is Germany's largest steel producer, has already been struggling. But the effect on the wider EU economy won't be that big because, of course, it is Canada, Brazil, and Mexico that are the largest suppliers of steel to the United States. So the effect on the bloc's economy is quite minimal. And there is one calculation by the Kiel Institute for the World Economy that showed that the previous tariffs of 25% were actually only expected to result in a very tiny decline in real GDP, a decline of 0.02%. And that is because, of course, steel and aluminum tariffs only account, aluminum exports only account for around 5% of total EU exports. So even the higher tariffs won't lead to much of an impact on the bloc's economy. But of course, they do have a major effect on European companies doing business in the United States, Mexico, and Canada, in particular car makers, because they produce in those markets. And of course, they do need steel and aluminum.
All right, I guess we continue tracking the dreaded T word at this time, tariffs. We'll see how it plays out. Thank you so much, Chip, for the details.
Yeah, it is really about the T word, tariffs, and maybe Trump too.
Yeah, the dreaded T's. Thank you, Chip. All right, to other stories now, we see Egypt's urban inflation rate. That saw its fastest acceleration of the year in May, reaching 16.8% year on year, up from 13.9% in April. The surge was primarily driven by rising or increasing food prices, according to the data released by the Central Agency for Public Mobilization Statistics, that's CAPMAS. This marks the third monthly acceleration in consumer price increases in Egyptian cities this year, following similar upticks in March and April. On a monthly basis, urban inflation stood at 1.9% in May, compared to 1.3% in April. And Ghana's annual inflation rate, that declined on the flip side to 20.9% in July 2024, marking the lowest level since March 2022 and the fourth consecutive monthly decrease. The reduction for June's 22.8% rate was primarily driven by slower growth in food and non-food prices. The moderation in inflation reflects the impact of tighter monetary policies and fiscal consolidation efforts. The Bank of Ghana maintained its key interest rate at 28.0% in May 2025, aiming to reinforce its tight monetary policy amidst easing inflation pressures. Despite the progress, inflation remains above the central bank's target range there of 6.0 to 10.0%. Analysts anticipate that barring unforeseen economic shocks, inflation could return to the upper bound of the target by 2026 and within the target by 2027. And South African business activity grew at its fastest pace in 4 years in May, driven by a robust increase in private sector output and improved customer confidence. That's according to a survey. The S&P Global South African Purchasing Managers Index, PMI, rose to 50.8 points in May from 50 in April, indicating growth for the first time since November 2024. PMI reading above 50 indicates growth, while below 50 points to a contraction. All right, let's get a check on what's playing out with other markets. Now, we're seeing a big half that's controlled by Bitcoin, fully in the red there, 105,000 still holding, down 0.29%. Other parts there, green, and the extended edge there, mostly red in the market there with Doge, part of the reds. We'll see the likes of Cardano, Ethereum, XRP in the green, 0.68%. Let's look at some of the headlines. There, according to Glassnode data, Ethereum balances on exchanges, that's fallen to levels not seen in the past 7 years, indicating a significant withdrawal of Ethereum from centralized platforms. This trend is viewed as bullish because when coins are moved off exchanges, they are less likely to be sold quickly, reducing immediate selling pressure and potentially leading to a price appreciation. Now we see Truth Social, the social media platform founded by US President Donald Trump, is filed for a spot Bitcoin exchange traded fund, that's an ETF, marking a significant move into the cryptocurrency space. That was yesterday. The NYSE ARCA submitted a Form 19B4 filing to the U.S. Securities and Exchange Commission seeking approval to list the Truth Social Bitcoin ETF. The proposed fund is sponsored by Yorkville America Digital, the crypto asset management firm, and backed by Trump Media and Technology Group, Truth Social parent company. We also see cryptocurrency hackers are increasingly moving away from exploiting smart contract vulnerabilities. They are now targeting users through social engineering schemes. According to Web3 cybersecurity firm Certic, in 2025, over $2.1 billion has been stolen in cryptocurrency-related attacks, with the majority of losses stemming from wallet compromises and phishing attacks. Phishing attacks involve hackers sharing fraudulent links to steal victims' sensitive information. Those are the top headlines there. In the market, let's bring in Solomon Amunde now, financial market analyst, to bring us up to speed. Hello, Solomon. Hello, Solomon. Can you hear me?
Hello, Laddie.
Yeah, it's good to have you, Solomon. Good afternoon. So we're seeing,
I can hear you.
Yeah, we're seeing the month of June moving on, quite fast, but we're not seeing much excitement when it comes to Bitcoin price action. But it seems Ethereum has something cooking. What are you seeing?
I'll say the community isn't expecting so much from Ethereum, except the fact that there are lots of big monies that are actually interested in Ethereum. Like we have lots of hedge funds that are looking at them loading up lots of Ethereum because sincerely, it's one of the oldest cryptocurrencies that hasn't actually moved. You can imagine Bitcoin is above $100,000, whereas Ethereum is still around $2,600. So it still has a huge upside to about $4,000. So looking at return on investment is a good buy for big money, and most of the VCs and companies looking at loading up cryptocurrencies. So that's the only reason. But aside that, the community, they don't have any new proposals that they are trying to push out to boost the performance of the whole ecosystem.
Right. So, looking at, some charts, from some of the analysts out there, it seems to show that Bitcoin might be flirting with a top at this point and possibility of a drawdown in price, maybe to maybe $50,000, $40,000 level, maybe. We don't know that, for sure, but that definitely spells doom for altcoins at this point. Do you think the best trade now is to stay out of the market?
Yeah, I would agree. The best trade right now, for those that are already in the market, they need to slow down the rate at which they are getting into newer projects, especially altcoin, because we're seeing a new trend where if Bitcoin moves, altcoins are very reluctant to move. And when Bitcoin corrects, most of the altcoins dump by 20-30% or even worse than that. And yeah, there's still that tendency that Bitcoin might break below $90,000, but I don't believe it would go below 90K. I feel the worst we'd see would still be in the range of $90,000 and $100,000. And we need that correction for a healthy structure on the Bitcoin chart. That's what we're actually waiting for. But long term, and by long term, I mean the next 6 months to about 1 year, I still don't see Bitcoin doing an aggressive dump to what most analysts are saying, 60K range or probably 50K or even 70K range. I don't see Bitcoin doing that because of the interest level now for Bitcoin is at all-time high. I mean, soon we'll see countries adding Bitcoin to their balance sheet. That's what we are bracing ourselves for, and that would only cause more scarcity. And let's not forget these countries, they are not looking at selling. Once they start loading up Bitcoin, they are not selling. That's something that most persons fail to understand. So we are getting into the time where we'll be seeing like more demand of Bitcoin and gradually lesser and lesser supply of Bitcoin or circulating supply available for the masses.
So I guess the million-dollar question now is 2025 the year where Bitcoin rallies and altcoins do nothing?
Well, we can actually use that catchphrase. Yeah, it's that year where Bitcoin will give the most return on investment on average than altcoins, because sincerely, most of altcoins have been slaughtered all through this year till date. They haven't even recovered after the February-March dump. And Bitcoin has managed to do almost another 30 to 40%. Yet most altcoins are still at negative from where they were at January. So we can actually agree to disagree that this will be the year where Bitcoin makes good returns, whereas altcoins stay stagnant.
All right, we'll definitely keep tracking. Thank you so much, Solomon Munde, financial market analyst. Thank you. All right, so there you have it. But at the end of the day, I guess Bitcoin and altcoins do whatever they want, at this point. But that's the market today. That's the midweek trade. We'll give you updates tomorrow. That's for the Thursday trade. Thank you so much for watching. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.